Good morning and welcome back to the Opportunistic Trader for January 18th, a Friday and a long week, not a fun week. Got stopped out again yesterday. The short side has not been great to us, but overall we're hanging in. We're looking positive. We think there's going to be opportunity here. Volatility has contracted 50%, actually more than 50%, about 57% off the high since Christmas Eve, and the market is up 14% from Christmas Eve, which is 15 trading days ago. The market is working on a 10 out of 11 day winning streak. I think it's only had one down close in the month of January. Markets are up more than they were down all of last year already this year in less than 12 trading days. So that's where we sit. They brought up the China deal pretty much every day this year. There is no China deal, but today or yesterday they said they might take tariffs off until they, come up with a deal, but the deal has to be done in the next month and a half. So I don't know why they would do that, and maybe in good faith, but either way, we're going to get a China deal, everyone. You know that. It's just a matter of what that China deal is and how long Trump stays in it before he goes wild on Twitter or, says they're violating the deal. I don't know how they're going to get a deal, though. They're going after Hawaii. They are saying that everyone's stealing trade secrets from the U.S. from China. So I don't know what kind of deal they can get, but overall, that's the mantra of the market. Interestingly, on Christmas Day, when there was trading, the S&P the day after Christmas opened at 2316. We are at 2650 basically. So we are 330 points higher than the intraday low already, maybe a little bit more. And that is a massive move. And, it just gives you the lesson that you don't really ever have to sell. You can just buy and hold and pray. But individuals' portfolios have not come back as much as the index per se. Apple is still $80 off the all-time high, or 85. Yes, it is up 16 or 15 from the low, but it's significantly off the high. Facebook low was 223. It's now, 123. It's now 150. So yes, it is significantly off the low, but it's also $75 off of the high. Same thing in Netflix, Google, and Amazon's doing a bit better. It just broke 1,700. The high was 2,100-ish. So, but it got down to 1,300. So these stocks have all bounced. Goldman Sachs 150 low at year end, and now it's trading at 200. So, and Citi 48 low, 62. So these stocks are screaming off the low, but yet if you look at returns over the period of the last year to a year and a half, there is no return. And really a lot of these other stocks, we can go through them: GE, Telephone, Alcoa, we can run the gamut of these stocks, and they're all down 30 to 40%. So you have a lot of that out there against the high flyers that they buy every day going up. So it depends on where you are, but overall the market is again higher off of the fact they're going to do a China deal. I think today that's the reason. But looking at China, it's not even really up. It didn't rally last night. It rallied maybe 1% and a third, and today it's pricing a little bit even lower. So I don't know if it could be that. And the S&P is up 1150 to start the day, and we'll have to see what goes on. The DAX has been the surprise performer all year. It's up 1,000 points, or almost 10% for the year already. It's up another 230. last year it was selling every day in that thing. I mean, it got murdered. I think it closed down it was down over 23 and it closed down like 16. It's already up 10 for the year. So that came all the way back, and all markets have come all the way back in 2 weeks. So
I was just looking at year-to-date performance. S&P is up just over 5%. Nasdaq's up about 7.25%. DAX is up 5.25% or 5.5% year-to-date. It is, though, for the 1 year period, it's down 17. Shanghai is up 4%, so it has been a huge January, but you got to take into effect how bad December was as well. Yeah, we're grinding back up, and
yeah, but January, what were we down net in S&P for the month of December? I think it was only about 6 or 7. We were down like 13 or 14, and then we came back 6% in the last 3 days. You could look at your chart and see that we're literally back. We got the whole month back.
Well, no, we were down over 10% in December. S&P started at about 2750 in.
Oh, it started there? Because I thought we were down 9 or 8 for that month, and then we are already up 6. So, I mean, we're we're talking semantics. It's 2 or 3%. It's nothing. We could do that in an hour. The way this market's going. So,
Absolutely.
you know, we've really gone down and straight back up, and everybody is whole again, and the markets are priced, you know, for perfection, and they're getting perfection. But I just, again, I don't know how the market is here. If you really look at stocks, even look at the marijuana stocks, you look at everything's so far off the highs. I mean, Apple is $80 off the high. How does it get there? I mean, it's the stock market will be well through an all-time high before it even comes close. So, you know, I guess the mantra of buying index is always the better play, because to pick individual stocks is too difficult, and you don't want to be in the stock that isn't rallying. So, you know, overall, you know, scanning the markets, the DAX is the outlier today. I don't think that number that you're looking at includes today's gain for sure, because the DAX started the year at 10,200, so it's almost 11,200. So it's probably up 8. Goes to 8. It's probably not adding in the 2.5 it's up today, but it's significantly outperforming. These markets are all higher, but the interesting one, I thought I'd go home last night, look at the China market and see it up like 5% one of those nights, but it was nothing. It was up 1%. It really opened kind of up 0.5% and drifted higher. So that's, you know, that's what's going on here. You know, my question to you, Mike, and I was thinking about this on the way in, the market has rallied basically since the government shutdown. It's exploded up somewhere around, I don't know, 7%, 8%, whatever the numbers are. So when they reopen the government, which everyone knows the government is going to reopen at some point in time,
someday,
you know that they're going to rally the market saying the government reopened. But the market never sold off. That's what always got me in the market for years and years and years.
That's one of the big headwinds. You know, you can still look at headwinds, possible headwinds that we were still looking at months ago. And this government shutdown, the government employees are going to be paid, but there are a lot of contractors that will not be paid because they're, you know, basically contracted through the government, but they're not getting paid. There's definitely going to be some negative feed through, whether it be through the ISM and through unemployment and things like that. We're going to start to see some of that run through the data, affecting, you know, retail sales, things of that nature as well. Then you got this China deal that, look, they'll probably figure something out, but it's probably not going to be like everybody we've spoken to, and I can go down the list of anybody from Joe Vaclavec, Ed Meir, Mark Fisher. Every single person we've spoken to really sees this as China as a long end game. They're not looking at a short-term sort of thing. You know, they're a country that have been around for thousands of years, and they're looking at, you know, really a long-term solution that is, they're far away from what we're looking at right now. So that's going to be a headwind. It's not going to be what's going to happen in March or leading up to March. There's still going to be trade talks for years going forward. So it's not going to be easy.
I'd like to take a bet on if and when they do a deal, how long it takes Trump to say either they're violating the deal or we're out of the deal. Hey, it's unbelievable.
Well, I don't think there's going to be a per se deal. I think that it's going to be the word of is almost like progress. They've agreed to do this and that. We're still working on, but official like long term, it's just not going to happen.
I think I kind of disagree. I don't know how real the deal will be, but the next time they come out of this thing, they're coming out with something that they're saying they won. Trump needs to win. Okay, he's not going to go, oh, well, we'll put tariffs here and, we'll do this. He needs a win.
It's a good point.
Needs
he
to
does
say
need a victory.
he needs a win. He needs to kick China's butt, and the only way he could do that is by saying he won and do something crazy. Again,
in 2020, it's already known that China, U.S., who's running, it's going to be a huge talking point. So he does need to leave at some point, by the end of the year with something that he can really sit back and say, hey, we've done this, and this, and it is a victory. But it's, even talking with Phil Flynn yesterday, the intellectual property stuff, and Ed as well was talking about this, it's really long-term, complicated, and they're not close. And I think yesterday, late day, they were rallying because Mnuchin was talking about possibly lowering the tariffs in the meantime as almost a sign of good faith, but that's been debunked.
Yeah, but
it's not going to happen.
Right, and that's a month. So that rallies the market billions and billions of dollars because they said for a month. This market has some serious issues. But right now, it's just a flow game, and everyone, the computer knows everyone's buying, so the computer's running in front of everyone buying.
Looks like copper's rallied to about 270. Crude's back to 53. So commodities are trading firm to start the year as well. Corn, wheat, soy doing okay. But when you take a look at the metals that take a look, the more industrial metals, they seem to be around. Yields right now close to 376 on the 10-year. So those have stabilized. What are your thoughts on VIX trading 1768?
I really don't have an opinion. I think the VIX is way too low. My opinion isn't worth anything because I thought the new normal was 20 or above. So we're below what I consider the new normal. I think this has been an extreme rally, and I think that everybody was long volatility and now throwing up on themselves, down over 50% for the year. I do think the new normal is higher than this, but again, we're in buy mode, and that's it. And then the next rumor will either take us up or down. Yesterday was ridiculous. First they said they were taking the tariffs off. Okay. Then it came out that they weren't taking the tariffs off, and the market didn't even come in, which was crazy. It was trading at like this level, 43, 45. It came in to like 28 or 30, and then they denied that they're doing anything, and the market never came in, which always is what happens. People sell, and then they can't get it back. And then today, it's more of the same. But if you really look at the markets, I would think if this was real, why is the FXI only up 20 cents? And not even through yesterday's high in China, if there's anything going on good in China. So I would think that this is overblown. The problem is there's no volume. Like yesterday, until we had that fake rumor, we barely broke 1 million contracts. At the end of last year, we were doing 2 to 3 million every single day. So this rally, as all rallies, come on no volume and basically no volatility. But the question is, I think 17 volatility is cheap for the environment that we're in. I don't think we're out of the woods fully yet, and I think there could be more downside. I'm thinking more of, I'm not calling it event risk, but just a total dislocation where we're down 100 to 200 SPU handles in a day. I think that's coming. I don't know when that is, maybe in the next 3 months, but everything's an excuse or a reason. When you talk to the news agencies and whatever, they're always looking for the reason. They're like, what's the reason we're up? What's the reason we're down? And the truth is, 90% of it is trade talks. They're like, oh, the trade talks are going bad. They're going good. They're going bad. The bottom line is what you just said. There'll be something in the next 3 months. But again, it's what we talked about earlier on our shows. China can outlast us. We have a president that's going to be up for re-election in a year and 9 months or whatever it is, and the campaign is starting in a year, really legitimately in a year to a little over a year. He's toasty toast. I mean, he's going to be focused on that. It's going to be an all-out war, and I think China can just sit on the sidelines. They've been in this situation. Their markets are crushed. They could wait it out. So I think they wait it out. I think they do something, but I don't think that it's anything that's significant. But again, it's what we just said. If we get the government reopened, what do you think the market's going to do?
I think it is a short-term bounce, but I think everybody
But why?
realizes that. That's, I think, I mean, it's like the algo headline, it'll bounce, but then I think that's the fade of, a huge fade. Any sort of bounce.
But I thought yesterday would be a fade because yesterday it was total fake news. I mean, and then the next day it's right back where it was, and it was fake news. So the bottom line is the government shutdown has not affected the stock market negatively in any way. It's actually affected it positively. So my question is, why you said we're going to rally because of the headline, because an algo is going to pick it up, but really,
I don't think it's a long-term rally, though. I think it's more the algo short-term pop. I don't think it's
right. But if the algo goes in and the market's trading at 26.46, okay, and it runs to 26.90, how can it come in? Where's it coming into? That's the same thing as yesterday. Like back in the day when there was trading and we would get something like that, you would go up. The market was up 28 handles. It was flat. It went up 28 handles. The news came out. Then they basically denied the news and they said the news wasn't as good. And usually the market would go trade down on the day because so many people had bought it up that they needed to get out. But that's not the market we're in.
Well, remember, take us back. I'm just pulling up the chart here, and this takes us back to the last day of November. It was a weekend. It was G20 weekend. The headlines over the weekend were, hey, the meetings with China went great, and we gapped up to 28.25. And now, if you recall, before that, like 5 days before that, we were trading 26.32. So we rallied like 200 points in like 7 trading days. And then that was it. Like the news came out, and then I'm just pulling up the chart. You can see my arrow. It was the next 15 days were straight down, and now the past 15 days have been straight up. But that's the sort of, sometimes news is released, you get the initial gap, and then that's the fade.
Yeah, but who's staying for 200 handles?
Well, but if you take a look at the move over the past 3 months, we've had a lot of those 200-point moves, 250-point moves over a 7-8 day period. And it does seem like we're calming down a bit. VIX is down here at 1767, and to be honest, front month VIX probably feels more like a 13 VIX right now, or 14.
Yeah, let's look at the straddle.
Yeah, I mean, I was just looking because the Monday expiration is really on Tuesday because the holiday, Martin King Jr., and that's only pricing in about $25, and that's 4 days. We were significantly higher than that in the past. But volatility, all it takes is one big down day, and then it'll be right back up above 20.
Yeah, I mean, I think the new normal is in that area. Today's straddle is pricing in $13. It's a joke. It's actually a joke. So we'll see. We'll see where we end up today. Overall, again, don't see much. What market's interesting is these currencies. They don't move. I don't know. You're a currency guy, but these markets don't move. I mean,
some of my friends, currency trading friends, literally are frustrated beyond belief. They're there's nothing going on. Pound sets a move with Brexit, but really not that much. I mean, we're trading down to 126.70. We're now above 129, so that was a move, but Aussie's been within about a big figure and a half. Dollar yen, we had that flash crash on January, I think it was 4th. But other than that, I mean, we're hanging around. Everything's in a pretty quiet range. especially in the majors. Euro has been between 115 and 113 for months, about 3 or 4
Yeah, I'm
months
saying
now.
there's no way to make. How do you make money in that thing? I
The
mean, it doesn't really.
frustration's at a high level
I mean,
because, despite all the volatility in the equity markets and commodity markets, oil got crushed last year. I mean, it was a move up and then just got crushed. Nat gas has been moving crazy when it was just 360, now it's back to 3.25.
you know what's funny? We were looking at the Netflix straddle over the last couple of days for earnings,
Right.
and it was funny. The 350 straddle, we looked at it, it was like $27, and I was like, "This is the cheapest I've ever seen a Netflix straddle," and we're going out right at the strike. So the bottom line is that straddle was a sale. It was $28. Oh, the news, I guess, today on the equity front is Tesla. Every time it gets up to that price, Elon Musk
Yep.
comes out with some nonsense and knocks the stock back down. So, markets are bid here. They're on the high tick of the day, actually, as we're speaking. There's no stopping it for now, and we'll see. We'll see later.
I see right now some individual names. American Express is trading down 2%. Earnings and guidance. Netflix is down small. I mean, it's been such a huge rally that it's amazing. Such a really not much of a price action on the earnings, but
It's all these other stocks like that you're not really looking.
yeah,
Like
no, I got the pre.
Apple's up $1, Facebook's up $1, Amazon's up 14, which is really like $1.40 if it was $100 name. These stocks are all up dollars. That's what I guess is getting us higher for the opening, but we'll see. Anyway, what is the schedule today?
We're going to be speaking at 9:15. We're going to be speaking on technical analysis with Alex Gurchik. He's a Russian trader. He actually interviewed Larry last week, and that's going to be coming out on his YouTube page. He has a lot of experience in trading, has traded for a few U.S. prop firms, and so he's going to show some technical analysis at 9:15. And then we're going to replay the option webinar from yesterday, because a lot of great information in that. And then we're working on booking one last minute, probably around noon, but we're going to update everybody. And then we'll be on throughout the day. But yeah, 9:15 coming up, technical analysis. We'll be talking that. So any sectors you're looking at today as leaders?
Yeah, I mean, oil is going to lead us because crude is up on the high. Technology is leading us in banks. It's the same trade over and over. Market's at 26.50 now. Last year, I think we ended the year before at 26.75. So really, over the last 12 months, we've been up, down, and everywhere, and now we're unchanged. So markets are extremely overbought. We're up 10 out of the last 11 days, but the bottom line is you can't get in the way of this, and you just have to sidestep it, and hopefully stuff changes. But overall, volatility is at legit zero. There is zero volatility here. The market's straight up. Maybe today we make a high and sell off, but I'm not expecting much, especially with straddles pricing $13. So, keep an eye on volatility. Keep an eye on the banking sector may lead today.
What's not trading well coming into a long weekend is the old Bitcoin. Tracy showed the chart, really not a bullish looking chart, and we are trading right now about 3,600, and volatility's dropped in that one, and it seems to be.
But it hasn't moved, right? I mean, it's been at 3,600 the whole year.
Yeah, but as Tracy's kind of chart was showing, the lack of upward momentum really is just ominous, and oftentimes Bitcoin does tend to move over these weekends.
It's funny though. Somebody put out on one of these on a site somewhere. It was giving the high and low closes over. I think Bitcoin started like in 11 or 12. Like, I mean, it might have been around, but the Bitcoin itself, average price in like 2011 was $1.
and success.
And Ripple's trading at 32 cents. It was 1/100 of a penny. Okay, so I don't even understand it. The money created out of air is unbelievable. But on the other front, to make it be considered real, I don't think it should be considered real because all coins total are only $110 billion market cap, which is really the price, the value of GE, or half the value of AT&T. So why would you have an ETF on something that's half the value of one stock on the stock market? So I don't think it's real. I don't think it ends well, but people love that thing. Hopefully I'm not using Bitcoin in 3 years to pay for anything. That's all I could say, because that wouldn't be fun.
Definitely polarizing. All right, well, we'll be back about 9:15 with Alex, and we're around in the chat if you have any questions. Talk to everybody in a little bit.
Good luck.